Will the U.S. stock market crash in 2024? Read this disclaimer before watching this video.
Hi everyone, welcome to another video. This is Sachin Tomar. Today I'm going to talk about the Dow Jones Industrial Average Index. As you can see, it's all set up here in TradingView. The main question that we want to answer is there going to be a crash in 2024? And we're going to analyze the data just by looking at the charts. So let's first start with a zoomed in view of let's say the 1 hour chart is a good one. So you can see most of July we've had pretty much an uptrend. So we can see that the market has been bullish. Let's just zoom out a little bit and see if there are certain trend lines that we can draw. So we can see that this trend line is sort of working. It's been quite bullish in the second half of the year, actually from June onwards, to be honest. Let's zoom out a little bit more and see what's going on. Interesting. So here we see that we've got a trend line looking possibly something like that. We can draw something like that. And it just seems that, from mid-March onwards, there's been a bounce, and sort of, let's say there's going to be a bounce to possibly around 34,500. Let's just zoom out a little bit more and just see what's going on actually. So nothing much on the 6 hours. Now we get a little bit more data. And what do we find? There we go. So. Why are people sitting soggy and foggy? Look at this. So from November or October of 2022, we had a major rally, and then we had a touch point on this line, another second touch point, actually second and then third and then fourth touch point. So this seems quite a reliable trend line that's actually been formed over here. And we'd say, the trend is actually quite bullish, right? But let's just zoom out a little bit more and let's go to the daily chart and see actually what's happening. So quite similar actually to the 12-hour chart. Let's zoom out a little bit more and let's see where the market actually peaked. So we get some more information here. So there's our trend line that we actually drew. And so it'll be good here to put the top, which is actually there around 37,000. So as most of you know, that there's a theory of double tops being actually bearish. So perhaps we could say that this is possibly going to do a double top at some point. We don't know exactly when, but let's just extend this out, right? And this kind of shows that somewhere around the new year, if it just keeps following this trend line, so somewhere around the new year, the Dow Jones has to basically decide that is it going to cross this or is it actually going to fall down. It's not actually very clear. So we can see that there is an ascending pattern being formed. Let's just zoom out a little bit more. So this was a 3-day chart that shows the information of, let's say, the past 2.5 years or so. Let's just zoom out a little bit more and see what actually is going on. So now let's look at the weekly chart, and then we get some more data. And this was the big COVID crash right here. Can we actually extend this all the way there? Wow, remarkably close, right? So we possibly can adjust it like this. So that actually looks quite beautiful. So look at that. Started off there was a massive move. So this was from 18,000, it almost doubled to 37,000, more than just a little bit more than doubled actually, and then touched back down over there. So that was the second touch and the third touch and the fourth touch and the fifth touch. So this is sort of the territory or the chart that's basically being used by long-term investors, right? This is not used by day traders or even by swing traders who normally would use some of the lower time frames as we saw earlier, right? So let's zoom out a little bit more. Let's go to the 2-week chart and let's see actually what's going on, right? Now over here, this trend line is, sort of, if we just extend, it's going to extend into no man's land. So what I'm going to do here is to add the exponential moving averages, and I'm going to take off this trend line. So we're clear that in the short term, at least, or let's say in the last few years, it's sort of in an uptrend, and there was a trend line. Now I've added two exponential moving averages here. One is the EMA 50 and the EMA, and the other is the EMA 200, right? So let me just put that there. So that's the EMA 200, and the first one there is the EMA 50, correct? Right. Let's just see how the market has done when compared to these averages. So you'll see over the last few years, right? It's pretty much hugging the 2 week 50 EMA, right? While the EMA 200 was touched during the COVID crisis here in March of 2020, and but the candle it went all the way down to about 18,000. But the month of March, or the 2 week period for which the candle is there, let's just zoom in a little bit into this so you can see clearly. So it actually, yeah, closed the 2 week period above, and then it obviously then doubled in value, right? Let's just go zoom out a little bit more, and let's go to the monthly chart and see actually what has happened. And some of the historical data will actually be very, very interesting to see here. So that's again the 50, and that's the 200. So let's have a look at as to actually what happened there. So now we can see that that one actually crossed even below. So in order to capture that, let's actually introduce another exponential moving average. I think let's just go for the 400. That would be good. So that's the 400. And now it starts to make sense. So you actually see a lot in the news during the COVID crash. Oh, this happened and that happened. Well, it did not even reach the EMA 200. And this is the 2008 financial crisis, which most of the millennials were not actually old enough to understand. But all it did was, yeah, let me actually put the value in there. So that, my friends, is the EMA 400, right? So what it just did in the 2008 crisis is it crashed through the 50, crashed through the 200, went actually to the 400, and it bounced from there. That's it. That was the 2008 financial crisis, and you can see that the bottom was actually in March of 2009, about 6 months after Lehman Brothers actually collapsed. So Lehman Brothers, if you remember, collapsed somewhere around around September of 2008, somewhere there. So the month of October actually opened at around 11,000, right? And Dow actually bottomed at 6,400. So if someone thought that the closure of a bank is actually the bottom, it actually was not. It was 6 months later, and it actually went down by nearly 40% further, right? So that's just the charts. It's giving us a very, very clear picture. Now, let's just zoom out a little bit more, and let's go to a 3 monthly chart, which is also known as a quarterly chart, right? So now in this quarterly chart, let's be very clear about what we're doing here, right? So we've got the EMA 400, the 200. Let's just arrange these so we can see. So that pink line basically denotes the start of the century. So that was the year 2000, where the market was at peak. That was the dot-com boom. That was the dot-com bubble, the burst, basically. So it just came down to the quarterly EMA 50. And now remember, we previously were seeing this at the EMA 400 of the monthly, but in terms of the EMA of the quarterly, it does not even touch the 200, right? Let's just go back a little bit in time, right? Some of you may remember, some of you may have heard from your parents or from a relative. That was the crash of 1987, right? What do we see over here? That the 1987 crash did not even correct to the quarterly EMA 50, right? And then after that crash, there was a massive bull run in the 90s and right up to 2000. This was pretty much the Bill Clinton era in which there was so much of reform um, in capitalist sectors that there was just a boom of the economy, right? So just I want to focus on these three exponential moving averages just to explain to you. Let's just go a little bit further back. So you can see here, this is a period from about 1966 to about 1982, right? It was pretty much a flat period. There was nothing much really happening around this time. It was just absolutely flat, right? So there, we call this consolidation. So there was consolidation around which moving average? It was around the EMA 50. You can see there was a touch here, and then there was of course a dip over here, but then it went back up, then a touch here, multiple touches here, and these, each of these candles is a quarter. So this period here is like nearly possibly 2.5 years or something. Then it tried to break out, came back to retest, a little bit more consolidation, and then bam, right? So this basically tells us that the EMA 50 is quite an interesting and important moving average. So after 1982, the next time when it touched it was actually in the dot com bust. Now, the interesting part over here is what we want to see. Let's just zoom into this part, right? And then we'll move forward from there. So, how far up was actually the value of the Dow compared to the EMA 50, right? So if we just go from there, we can see it was nearly 100% up, right? And then it came down and so let's just fix that there. So it was nearly 100% up, and then it took nearly, um, yeah, 2.5 years to actually come down and crash. If you remember, the dot com bubble actually burst somewhere in the second quarter of 2000. So it actually took 2.5 years to actually come back over here. And then this was the subprime mortgage crisis that everyone knows as the global financial crisis, and Occupy Wall Street and all those social activist things happened. But if anyone just looked at the charts, they would figure out that this market was overheated as well by about, so this time it was only 55%, right? So it was not even that much overheated statistically over the EMA 50 as compared to what happened in the dot com boom. Let's look at what actually happened over here. So let's which was basically the COVID crash the next time when it came actually to touch. So if we go up and if we see this was actually somewhere around the 60% mark, which was quite similar actually to the 2008 financial crisis. This actually corrected in a hurry. If you see the 2008 financial crisis, there was so much of downward momentum that actually crossed way below the EMA 50 and went up. Here, it just took one quarter, it just came back and it touched once again. This is where you have all the heavyweights sitting with cash and they actually go in. So, what's the situation right now? If you see exactly right now, the market is about, let's say, 50% overheated, and when it goes and it actually reaches the top, it'll be about 53% overheated. Similar values compared to the 2020 COVID crash as well as the 2008 global financial crisis. So I leave it to your better judgment. We have seen in the past several times in 2002 and 2009 as well as in 2020 that it's actually come down. There's quite a large possibility that this will come down and correct once again. If you like this video, click like and subscribe. Thanks for watching.